And welcome to the VSA Capital Tech and Transitional Energy Podcast. October the 21st, it's with myself, Andrew Monk, the CEO of VSA Capital, to get it right, and Phil Smith, our Head of Tech and Transitional Energy Research. How are you, Phil?
Very good, right. Thank you very much, Andrew. But I was reading on the BBC website today that Unilever are thinking of putting up the price of Marmite. So that was a bit upset.
Are you a Marmite lover then?
Yeah, I like Marmite.
People do say I'm a bit Marmite myself. Some people like me, some people can't stand me.
Oh, that's a bit harsh. Right.
Also, I've had a very busy week this week, so you're going to again have to look. I've been in Beijing this week. Not in reality, virtually, unfortunately, but we had an incredible conference there this week in mining. And so I have been getting up at 4 o'clock and in the office at 5:30 every day. So we'll just see where today goes. Actually, I'll tell you what, why don't we start today? We can have a little bit of a chat about one of our favourite subjects, but obviously there's a lot in the press at the moment about COP26, and we've had all these dignitaries and Bill Gates or whatever all fly in to talk to Boris Johnson. The newspapers have been full of the green revolution and putting in charging points all around the country so you won't be able to move for them. Energy storage everywhere, wind and solar everywhere. Boris says it's going to be all whiff whap and amazing. And I'm sure it will be, by the way. But it's all over the newspapers. And we've also seen this week a potential IPO coming out of a company called Gallion, a zinc bromide, Australian zinc bromide battery manufacturer. And I thought it'd be quite useful. And I'm going to turn the floor a little bit over to you, Phil. You know, obviously we act for Invinity, our favorite vanadium flow battery company. There's quite a lot of other battery companies that have sort of are coming to mind, shall we say. I know one was AMTE about 6 months ago, and we had a lot of question marks about the valuation and how much cash they'd raised. And I noticed that actually basically since the IPO, the stock has slowly but surely gone from the top left-hand corner of the graph, the chart, to the bottom right, and stock's come right back to sort of 180p. But I thought it would be quite interesting to ask you the question, Phil, is, you know, what is the basic difference between all of these different batteries, and why is it, to a certain extent, that we're so keen on vanadium? I mean, obviously, I do know the reason for that. It's because there's long life. It doesn't degrade. I mean, that's the real key to it, isn't it? But do you want to just give a little bit of a chat between the difference between that and a zinc bromide, an iron battery that obviously Bill Gates is trying to promote, and some of these others? What's your view there and the difference?
The main, that's a big question. The main differences are in terms of often physical size of the energy density. That's the amount of sort of energy you can get out for the weight, for the efficiency of the things, what's called round trip efficiency, and the longevity of the technology. Clearly, lithium ion is the most, has been the tech of choice and is the most widely used. But there are known issues with lithium ion. I mean, of course, one of those is thermal runaway and heat performance. But also, if you cycle it constantly, then its ability to hold charge degrades over time, and they need replacing. And there's a cost of replacing them. But lithium ion is a very dense technology, so you can get quite a lot of energy into a relatively small volumetric space, for example. And then we have flow batteries and Invinity Energy. You know, our client is a flow battery technology company, and that's a different mechanism. I mean, you have tanks of fluids, and where you've got something like vanadium, where you have vanadium, where there's an extra electron or where there's a less of an electron, so the charge is different. So you're pumping the fluids around tanks and through a membrane. But the beauty of that is that with flow battery technology, you can constantly charge and recharge. You get a real high depth of charge, and they don't wear out so much over time. So there are advantages to the technology there. And of course, Gallion is it's a form of flow battery, but it's a gel type. So instead of having tanks of fluids, they're using gels and a separated membrane. But it's an earlier, this particular company is interesting to look at, but it's come out, it's a spin out of the university, so it's not at a later commercial stage per se yet. And they claim that because you don't have the tanks and the pumps, then it's potentially a lower cost solution than a vanadium flow battery solution. So there's a lot of different formats out there, but I think what's interesting, Andrew, is that there are more alternatives to lithium appearing, and I think that is a good thing, because it means that the project engineers are likely to be opening their eyes to different solutions beyond lithium. So that's a plus.
I agree, actually totally agree with you on that. I think to have more technologies would be a really good thing. But again, coming back to one of the big things, isn't it, is that when you're basically turning one fluid into a slightly different fluid, be it, through sort of oxidation and this sort of thing, as you say, moving the electrons around. Yeah. Basically, it's just fluid, and so there's no degradation because there's nothing in the middle of it all that degrades. The problem with things like zinc bromide and some of these other technologies and iron, which is basically you're rusting something and then derusting it, which, as we know, rust isn't good. You're plating, and so the plate basically can wear out, and that's why you get this degradation. And isn't this the issue?
Yes, there are technical challenges with that. Yeah, you do get corrosion that's recognised in zinc, but there are, as you know, there are ways of getting around that by using different sort of metal elements added to the electrodes, but also different elements to the electrolytes. But I guess the thing is, it's one of those great things. It's a technical unknown. There are solutions, and then it's a case of how they're implemented, what the costs involved, what are the costs involved there, how much of a risk are these things. It's just that element of uncertainty. But as I say, on the flip side, the fact is that different technologies are appearing, which is I think just overall that is a positive thing.
I do agree with that. I mean, the other one that worries me slightly on zinc bromide, I don't know, did you ever look at Primus Power?
I've not seen that. No.
About $130 million went into that, and it never got going. It was a zinc bromide battery, and unfortunately, it basically has fallen to pieces, shall we say. After $130 million, that's a lot of money to throw at something and then not get a result. Anyway, look, it's interesting. I think, again, there's so much talk about trying to go to, net zero, as it's all called. Energy storage has got to happen, and it's really not a case of which method is the best, but what is going to come and sit alongside lithium, because at the moment that's really the only thing out there, and I've got to be alternatives.
Yeah. What's interesting as well, that there aren't many of them, Andrew. There don't seem to be too many around.
No, I don't think there are, and there are certainly very few around that are, in production and operating, which obviously is where Invinity have a huge advantage. They're now operating their first cluster at the Energy Super Hub Oxford, and this week, of course, they announced that they're putting it in for Scottish Water, and these are seriously good brands is the wrong word, but household names, Scottish Water, EDF, that are buying this kit off Invinity and running it. So yeah, it's exciting.
It is, and there is so much capital going into the space. I mean, I'm sure you saw this week, Andrew, as well, that ITM Power raised nearly £250 million.
Actually, it's funny because Phil, they announced that last Thursday, just after we'd finished recording this podcast.
They did indeed, yeah.
We got a bit caught out there, didn't we? But yeah, that was a hell of a raise.
Yeah.
Obviously, they had the advantage. They got Linde, who sort of cornerstoned that raise, but 250 million, and that just shows the sort of sums of money you really need. And of course, as ITM are basically an electrolyzer creating hydrogen, and if you're going to create green hydrogen, which is what they want to do, you create it from renewable power, which is wind farms and solar energy, and of course you've got to keep that power going constantly. But the wind doesn't always blow and the sun doesn't always shine, so you've got to have energy storage sitting in the middle. ITM only works with energy storage, and it is being talked about. Would ITM invest in Invinity or something like that, because it's such a natural fit. I think I might have to go up to Sheffield, Phil. Should we go to Sheffield?
Be delighted. We know the way up there.
Actually, I'm not very good at up north. I have to be careful what I say. I might get shot for this, but is
Yeah,
Darlington is Darlington near Sheffield?
Hey, we're going to get corrected by listeners. It's on the way ish. Yeah.
Is it? Because I noticed that
Yorkshire. I think Darlington's kind of Yorkshire. I'm from Cheshire though, Andrew. That's the other side of the country.
Yorkshire's miles up north, isn't it?
Anyway, moving swiftly onwards.
No, I mentioned Darlington though. I'm going to attempt because this is relevant actually. Sorry, because you may remember you wrote a note called "Picks and Shovels in the Transitional Energy Space."
I did,
and talked a little bit about Tecmar.
I did.
Tecmar do the undersea cables and everything from these wind farms.
Yeah.
To get the energy from the wind farm to the land. So it's all part of this little jigsaw puzzle we're picking up. And they had a trading statement today, and it was a bit sort of if you see what I mean. But we like it because it's a picks and shovels. And although they did, well, I suppose effectively warn on current trading, I'm going to find it for you a second. What did they said? It says the thing is that it's a very interesting proposition and a very interesting position for wind farm development. As they say, the industry is a major inflection point in terms of significant acceleration in offshore wind capacity investment. And so they then went on and said that this combined with the broader energy transition aligned with the net zero by 2050 imperative and our initiatives to deepen and extend our capability across the energy products life cycle provide clear drivers for sustained future growth. Now, the market actually didn't like it particularly and has smacked the stock 15% or something. But I think they're right about the long-term viability of Tecmar, which is why I emailed them, and they're based in Darlington. So I think we need to go and see them in Darlington, Phil.
Excellent. I look forward to that. But I do hear what they say about longer term investment and, particularly on wind power. And I don't know if you saw that Greencoat Renewables, ticker like GRP, they've raised 165 million euros this week. And they already have a whole mix of wind and solar assets that they look after in Ireland and in Europe. They've got 300 megawatts. What they said here, exclusivity over 300 megawatts of assets. And a very large pipeline of opportunities ahead. So it's the capital coming into the sector, and there's a lot of it.
I mean, there's a huge amount of capital piling into the sector, but they do tend to go into what I describe as these sort of project funds, don't they? Where the project fund manager, we're gonna run a battery farm, or we're gonna run a solar farm with battery. Not that many are going into the actual, other than ICM, obviously, the actual underlying companies, which is really perhaps where we need to see some money flowing. And actually, it's where you get, you can invest in a nice energy farm and maybe get 10% per annum. But you invest in the underlying companies, you can get, 100% per annum.
Oh yeah, if you get invested in the underlying tech. But that's why, as I say, this whole idea of more tech coming into the sector and getting under the noses of the project managers is really, really important. And maybe they will shift, in terms of what they're investing and how they invest, they'll invest more towards the tech. I mean, that could happen.
No, it's all go. It always is all go.
It is not dull. No.
But I also see that Boris, I think it was Boris again, probably just before he was having dinner with all these dignitaries that came over to, I think it was dinner with the Queen. So she couldn't make it to Ireland, unfortunately, but she probably could have dinner with these dignitaries. But he was talking about literally thousands of charge points, hundreds of thousands of charge points going in all around the country. To get us all to drive EVs. And then he's also talking about, I think, giving us £5,000 to replace our old boiler. And by that, I mean the gas boiler that heats the water, not a sort of name of, don't read me wrong on that one. My wife wouldn't like that at all. 5,000 to put in a heat pump. Do you think that will catch on?
Well, heat pumps. I tell you the difficulty. The big challenge with anything that involves changeover in a home of things like boilers is a man or a lady in a van. They all need to be installed and the old system's deinstalled. And it's totally different technology to sort of standard gas boilers, and everyone needs training up. There's quite a long cycle involved in doing it in the first place. That's just one barrier as to how efficient the heat pumps are versus a gas boiler, I have to say I don't know. But at least we're looking at alternatives.
I mean, I do remember, and you may well too, with not suggesting that you're as old as me, but we're both getting on a little bit, when basically the whole country went to gas. I remember getting the first gas boiler in, actually, and it was incredibly exciting. Because dare I say it, I certainly know that I remember going and visiting my my grandmother when I was young. I mean, all she had was an Aga that was used coal, and that was the only form of cooking and heating she had in the entire house. And then I remember, gas came along, didn't it? You know, and North Sea gas. The whole country got gasified, so to speak. Yeah. I remember all of that. And then, of course, you know, in I think it was 1986, we had the IPO of British Gas, Telsyd. You know, Telsyd to get out there and invest his money in British Gas. That's turning the clock back, isn't it? Right, let's move on quickly. I'm showing how old I am.
Anyway, look, on the subject of EVs and electrification, did you see Tesla's results were out this week? And it was their third quarter results. And something that caught my eye in this was, apart from improving gross margins and top line revenue, was a number of cars that they had built. And they had built 238,000 vehicles in the period to September end, the quarter. And there's an analyst comment here that might be on target to build 900,000. Blimey, I mean, that's getting to real scale in automotive. And they've done that in the midst of the biggest crisis there's ever been in supplies of electronics and semiconductors into the automotive market that I can remember. I thought that was quite, and Tesla will be in a lot of folks' funds as well. So that was. Well,
I saw a headline somewhere that said we might have to start believing what Elon Musk says. And I know stock price is back at $865, which I think is basically a record high again. Yeah. The stock's performing too. You can't ignore Tesla. Amazing.
Do you think that, to do that with their supply chains in the state that supply's been in, you think what it's going to be like when things actually ease up? Bloody hell. I thought that was very impressive. There you go.
I'm glad you liked it. What else have you seen this week?
Hey, right, I tell you what, I've got to, did you see, right, just quickly off company results, but a cracking article. It was a really interesting article in the Times about someone that's a tech firm. They're growing basil in a vertical farm in Scunthorpe using LED lighting. And we've talked a bit about agri-tech, but this was fascinating. And I reckon they've got the capacity to grow just under half of the UK's daily basil requirements. For those of us that use basil in salads, etc. But all that grown.
You're not. This isn't a Monty Python sketch, is it?
No, it's not. No, that did occur to me when I was reading this article. But isn't that amazing? I thought that was quite something. Right, we did. I better before we go off. There have been a couple of trading statements, and these are for companies that I think are real quality. Been around for a while. Spectris. And this is one I used to cover as an analyst. The ticker's SXS, market cap's about 4.2 billion, and they had a trading update for 3 months to September. Why this one is interesting to look at for investors is they make instrumentation, so it's electronic instrumentation that's used in all sorts of areas of measurement. For noise, vibration, material thickness. They've got X-ray equipment for X-ray mining samples. So they supply to automotive, aerospace, mining, environmental, so a whole range of industries. So just from reading their trading updates, you can start to get a feel for what is really happening in the underlying economy. And they had seen their orders up. Now, bearing in mind, this is kind of 3 months to this September, Andrew, and last 3 months to last September was not a great time in terms of world economy. But their orders were up 31%, which caught me, and they're expecting a 12% like for like. You've always got this company acquires and disposes, it's a portfolio company. So you're looking at like for like revenues because certainly businesses will be disposed of in the time. But they were saying, so strong order growth, good revenue recovery, but they said that it was across all regions, but with the strongest performance in Asia, driven by China and South Korea, and then followed by Europe and North America. And they'd seen some of the strongest demand, naturally in semiconductors, which was just been mentioned with Tesla and electronics, but also into metals and mining, the area you know about very well, and pharmaceutical, because their instrumentation is used for developed for drug discovery, for measuring compounds. So that was Spectris, and a really interesting company to watch there. So the other one is Renishaw.
Yeah, that was one hell of a result today, wasn't it? What a turnaround and recovery.
Yo, Blimey O'Reilly. Now, Renishaw, investors may remember, was in March of this year, it was announced that the two founders, John Deere and Sir David McMurtry, wanted to sell off their combined share, 53% of the company, and the company market cap is £3.4 billion. And the guys, I think, are in their in their 70s, but they were going to sell off their share.
They announced in July they couldn't get anyone to buy it, didn't they?
They did indeed, and part of that was they said, and I can believe this actually, that no suitable offers that satisfactorily met the interests of all stakeholders, and we consider our stakeholders, considering the culture of the company it wanted to keep, commitment to local communities where they operate, and obviously employees, because companies get bought out, big ones. What happens? Usually is restructuring. But so getting back to the biz, yeah, as you say, quite a turnaround.
It was actually, I can tell you, they came in actually, I hate adjusted profits, but their adjusted profits were just shy of 120 million, right? Which was up 146% from last year. And you know what? They got 215 million of cash in the bank.
It was compared with 120 million in the prior period. Now that's what we call operating leverage and drop through. Wow.
I mean, maybe they'll get some offers now.
I would suspect so at that. And again, they were saying that. So what do they do? They make, again, it's measuring equipment, Andrew, for industrial processes. But their decoders, their measuring kit, is hugely accurate in the degree it can measure to in terms of dimensions, and they're widely used in semiconductor equipment in manufacturing, but also their measuring probes are used in automotive. But they were saying here that and for machine tool products as well. So wherever you go around a factory, you see machine tools. Bet you'll see a Renishaw gauge on there that's measuring the dimensions of metal beam machine. But strong demand from semiconductors, electronics, and machine tools. So this is all. Do you know what's really interesting about this? This is capital equipment spend coming back. Spectris and Renishaw. And when companies aren't confident, what do you cut? You cut your travel expenses first, then you cut your capital equipment spend. That goes. You make, do, and mend. Let's leave the kit, replace it next year, Phil. And these are indicators of spend coming back. That's a good positive thing.
I'll tell you what, we've got about 6 minutes left of our 30 minutes. We try and keep it to that. We've got to turn around to our sort of tech trends and brands, because obviously this week we're doing the IPO of Silverwood Brands. But after this call, I've got to go and jump onto a webinar. This is the company that we've sort of helped create and are floating, which has got Andrew Jerry, who is the chairman of Hotel Chocolate and also was the CEO and one of the original founders of Lush. In fact, still owns 20% of Lush. It's also got Angus Thirlwell as a senior board advisor. So he is the CEO of Hotel Chocolate. And they've also got Andrew Tone, who is in Japan, where brands are very important. And he worked for Lush as well. And they've also actually got a couple of others who have worked for, been on the boards of Hornby and Virgin and things like this. So it's a really exciting brand cash shell, effectively, we're creating that is then going to go and do deals. Now, obviously, as a cash shell, they can't say what deals they're going to do because they're not allowed to. But these guys really know what they're doing. And I think this is going to be one hell of a stock. So we are actually just doing that at the moment. Obviously, if people want to get involved, let us know, because you can. It's an IPO. It's open to all, effectively. We're not raising too much money because there's no point until they've got the deals. We don't need to. But what a team we've put together. But also this whole brand space, Phil, I know we've been talking about a lot because on Monday we're actually going to go and see the division of S Ventures, which is a company on the Aquis Exchange that we act for that's really growing fast. We're going to see one of their businesses in Gloucester together. But I know you pointed out to me this morning that on one of the crowdfunding sites, there's a company called The Serious Pig, which makes, it was on Crowdcube, wasn't it? Makes a little bar snacks, like snacking ham and snacking cheese and things, or whatever. Anyway, they appear to have raised about £750,000 on their crowd site. But you know what? They're at a valuation of 15 million and only have 1.3 million of sales. I mean, that's 10 times sales, Phil. That's an incredible valuation.
Well, it is. Well, that's what you see for very leading edge tech companies. I was quite astonished at that. Well, hats off to them for doing that. I tell you what, they do make very tasty snacks. But it's a great area to be involved with, and it's it's super that we're working with S Ventures and Silverwood. What an exciting board! My word, that's a proven team. That's a proven team there. But we'll be discussing a lot more about this area because it's the whole area of its brands and its food technology. And it's structural growth, isn't it, Andrew? People's eating habits and what they're doing is changing. It's structural growth we're interested in. So, we might have to change the tech trends and brands.
It's got a nice rhyme. Have you eaten some of these Serious Pig snacks then?
Yes.
Does that make you a serious pig?
Right. I'm not going to answer that one, especially.
I couldn't resist that. Sorry.
Now I know that Marmite prices going up and being called a serious pig. That's it. That's me for the day. I look forward to chatting next week.
Yeah, exactly. We'll call it a day there. Again, as I said at the end of all of these podcasts, if you've got any comments on what we've said, please let us know. If you've got any companies you want us to talk about, please let us know. We love talking about companies. We don't mind doing a bit of research for you. Although I tell you, actually, as we wrap up, I'll tell you something I've noticed recently, Phil. Although the FCA is trying to make it so that retail investors can't invest in the stock market at all, they'd love them all just to go to funds. More and more retail sites are opening up which give them access, shall we say, to companies and research. I've noticed an absolute expansion of these things. We all know about the Proactive and the Mellow, but I saw another one called Investor Meet the other day, and a fascinating competition run by PI World, which I think is quite an interesting business, where they had this 3 retail investors pitching their best idea to 3 fund managers, one of whom was Andy Bruff. And it was a really interesting video blog, what do you call it, or webinar, I don't know what you call it.
Yeah.
But fascinating to see some of these. Well done, PI World. I thought that was, they put out some really interesting stuff, run by a lady called Tamsin Freeman. Well worth watching some of her stuff.
Hey, I'll look out for that. I mean, I'm all in fact anything that gives private investors the opportunity to invest in good quality businesses. I mean, how are we supposed to grow the economy?
We do allow. Well, we do. You have to, if you come into our IPOs or our deals at VSA Capital, you have to pre-qualify, so you basically tick a box saying I'm institutional. We make it as painless as possible. But if you do that, you can then come into the deals that we're doing. So there you go. On that note, Phil, we'll speak again next week.
I look forward to it.